Before we get into it, if you have been watching XRP and wondering whether something quietly shifted beneath the surface, you are not imagining it. Hit subscribe and turn on notifications so you do not miss what we break down next, because this one matters. Something changed with XRP, not loudly, not with a headline that stopped everyone in their tracks. It happened the way most important things happen in financial markets, gradually, then all at once, and mostly out of view of the people who were not paying close enough attention. And that is exactly what we are going to talk about today on Wealth Chain Network. My name is not important. What is important is that you walked into this video with a question, and you are going to walk out of it with a clearer picture of what is actually happening with XRP right now, what this new phase means, why it matters, and what you should be watching for in the weeks and months ahead. Before we go any further, I need to be upfront with you. Everything on this channel, every analysis, every observation, every piece of context we share is strictly for informational and educational purposes. Wealth Chain Network is not a financial advisory service. Nothing you hear in this video is financial advice, investment advice, or a recommendation to buy, sell, or hold any asset. Crypto markets are volatile. Prices move in ways that can surprise even the most experienced analysts. You can and may lose money. Please do your own research. Please speak with a qualified financial professional if you need guidance specific to your situation. We are here to inform, not to tell you what to do with your money. Now, let us talk about what is really going on. To understand the phase XRP has just entered, you have to go back a little, not years, just far enough to see the shape of the journey, because XRP has had one of the more unusual trajectories in the entire crypto market. It launched with enormous ambition. It attracted serious institutional interest early. It was backed by a company, Ripple, that was not building in the abstract, but was actively signing deals with banks and payment corridors around the world. And then it ran headfirst into a wall that almost no other project had to face in quite the same way: a direct, sustained legal confrontation with the most powerful financial regulator in the United States. The SEC lawsuit against Ripple was not just a legal inconvenience, it was an existential question. It asked, in the most formal way possible, whether XRP was a security, and if the answer was yes, the implications would have been severe. Exchanges would have had to delist it. Institutional partners would have had to walk away. The entire ecosystem that Ripple had been building would have been placed in serious jeopardy, and for a period of time, that uncertainty did real damage. It pushed XRP to the sidelines of a conversation it should have been at the center of. It gave competitors room to grow. It made institutions nervous about touching something that carried that kind of legal cloud. But here is what most people either forgot or never fully appreciated. Ripple kept building through all of it. They did not stop. They did not retreat. They continued expanding their payments network. They continued signing partnerships. They continued developing the infrastructure that their entire value proposition rests on. And they did it while fighting one of the most consequential legal battles in crypto history simultaneously. That is not nothing. That is actually a remarkable demonstration of institutional resilience, the kind of thing that, in retrospect, separates the projects that are genuinely serious from the ones that fold the moment real pressure arrives. The resolution of that case changed things, not immediately, not overnight, but it changed the fundamental conditions under which XRP operates. The legal cloud lifted. The regulatory picture clarified, not perfectly, not completely, but enough. And when that happened, something else started to happen too, something quieter and arguably more important than the price movements that followed the news. Institutions started moving, not all at once, not with press releases and fanfare, but in the way institutions actually move when they are serious, slowly, carefully, with due diligence processes that take months, not days. The conversations that had been put on hold during the lawsuit began again. The partnerships that had been quietly explored but never formalized started to come together. The infrastructure that Ripple had been building started to connect to real capital flows in real financial corridors around the world. This is the part that almost nobody noticed, because the market was focused on price. Everyone was watching the charts. Everyone was waiting for the big green candle, the explosive move, the moment that would confirm that XRP was back and the doubters were wrong. And in focusing on that, a lot of people missed the thing that actually matters more: the structural shift that was happening underneath the price action. When institutional capital starts moving toward an asset, it does not always announce itself with a dramatic price spike. Sometimes it shows up first in volume patterns that look unusual but not explosive. Sometimes it shows up in the way an asset holds its ground during broader market sell-offs, refusing to go down as far or as fast as everything else around it. Sometimes it shows up in the expanding number of use cases and integrations that do not make headlines but represent real demand being built into the system. All of these things were happening with XRP, and most people were not looking at them because they were waiting for something louder. The new phase that XRP has entered is best understood not as a price phase, but as a utility phase. For years, the argument for XRP was forward-looking. It was about potential. It was about what the network could become if the regulatory environment cooperated, if institutions adopted it, if the technology proved out at scale. That argument required a certain leap of faith because the evidence was still being assembled. But the argument has shifted. The evidence is no longer entirely forward-looking, it is increasingly present tense. Ripple's on-demand liquidity product, which uses XRP as a bridge currency to move value across borders in real time, is not a demo. It is not a proof of concept sitting in a lab somewhere. It is being used by real payment companies moving real money through real financial corridors right now. The number of those corridors is growing. The volume moving through them is growing, and as that growth continues, the relationship between XRP's utility and its value becomes less theoretical and more observable. This matters because it changes the nature of the investment thesis. When you are betting on potential, you are vulnerable to doubt. You are vulnerable to the moment when patience runs out and people start asking why the potential has not been realized yet. But when utility is already present and growing, when the product is already working and the only question is how far it scales, the thesis becomes more durable. It becomes harder to dismiss. And it attracts a different kind of attention. Not the speculative attention that chases price, but the analytical attention that looks at fundamentals and asks whether the market has fully priced in what is already happening. The market has not fully priced in what is already happening with XRP. That is not a price prediction. It is an observation about where we are in the information cycle. The people who are aware of the structural shift tend to be closer to the industry. The people watching institutional flows, reading regulatory filings, tracking on-chain data, paying attention to the kinds of quiet signals that do not make it onto mainstream financial news. The broader retail market is still largely operating on the old narrative, the one that defines XRP primarily by its legal history and its price history. When those two narratives start to converge, when the broader market catches up to what the closer observers are already seeing, that tends to create a meaningful repricing moment. We are not there yet, and I want to be honest about that because I think honesty is one of the most valuable things a channel like this can offer in a space that is drowning in hype. We are in a transition period. The old narrative is fading but not gone. The new narrative is building but not dominant, and transition periods are uncomfortable. They are marked by false starts and moments of doubt and the temptation to conclude that nothing is actually changing. But they are also where the most significant positioning happens, because by the time the new narrative is obvious to everyone, the opportunity has already moved. What you should be watching right now is not the daily price. Watch the volume of real transactions flowing through Ripple's network. Watch the pace at which new financial institutions and payment corridors are being added. Watch the regulatory developments coming out of Washington because the environment is meaningfully more favorable than it was even 18 months ago, and the direction of travel continues to move toward clarity rather than away from it. Watch how XRP behaves relative to the broader crypto market during periods of stress, because an asset that holds its structure when everything around it is falling apart is telling you something important about where the underlying demand is coming from. Watch also the broader conversation happening at the institutional level about digital assets in general. Because XRP is not operating in isolation. It is part of a larger story about how the financial system is going to incorporate blockchain technology over the next decade. And in that larger story, the projects that have real infrastructure, real regulatory clarity, and real use cases are going to be positioned very differently from the projects that are still operating primarily on narrative and speculation. Ripple has spent years building the former. That positioning does not happen overnight, and it does not go away overnight either. There is one more thing worth saying, and it is something I come back to often because I think it gets lost in the noise of this market. The people who do well in crypto over meaningful time horizons are rarely the ones who caught the perfect entry on a short-term trade. They are the ones who identified a genuine development early, understood it well enough to hold conviction through the inevitable periods of doubt, and stayed patient long enough for the market to reflect what they had already seen. That requires